Okay, this one is paper 21, May June 2024. Let's start with the first question. Odo is a trader who only sell on credit. That means when they say sell on credit, all your credit sales equal to your total sales. His trade receivable at 1st April 2024 were as follows. So this one, you have 4 customers. During April 2024, the following transaction took place. Let's see what is the question about. Okay. The question A, prepare the sales journal for the April 2024. Total the sales journal and indicate the ledger account to which the total will be posted. So for your A, because you only have all the credit sales, so basically whenever you saw the sales to somebody, then you take notes about it. Okay. So date, detail, and dollar. Okay. The year is 2024 April. Okay. So let's see what are the first entry. The first one, April 2nd, sold goods to AWA. Okay, this one, list price 150, less trade discount. So what I'm going to do, I show you 2 ways to do the recording. You can either put in AWA and then put list price, the amount, 150, and then put another one, trade discount. Put in the percentage, 6%, and then calculate what is the net times 6%, and then show the net in the next column. So the first column is show the detail, second column show the net amount. Okay, next is that receive telephone transfer. This is nothing to do with the credit sales, so don't put in. Sold goods to Nurul. So because they say all are on credit, so basically 12 related. But they didn't mention any discount, so you don't need to do anything. Straight away, take the 165 for the recording. The next one, receive a check. This one also nothing to do with the credit sales. Next, 19, receive 760. This is also nothing to do with the sales. Nurul return, this is a sales return, so don't take because you are recording sales journal. Sold goods to Mahir, list price, trade discount 5%, cash discount 5% if invoice paid. So take notes about the sentence. The first part is talking about the sold goods. We only calculating the credit sales. Don't take this cash discount. Only calculate the credit sales. So on 21st, put the Mahir. This is another way to show it. You can choose this way. You take 480 minus the 5% is how much? Take 480 times 5%, you get 24. So you can show this way as part of your working. So you get 460. This you can do this way or do this way, up to you that you prefer. Okay. Now, next is that there is no other thing. The last sentence, this one, Rachel become bankrupt. This one basically is an irrecoverable debt. So the total for the sales, this is the amount. So this amount, what you got to do is that you have to transfer to, how we record the transfer? Last day, April got 30 day, so 30th, transfer to sales account. Take notes. This is a sales journal, so when you need to transfer, is transfer to the sales account, not sales ledger. Next one. B. Prepare the journal entry to write off the amount owed by Rachel. A narrative is required. So let's see B. B is actually referred to the last entry they are mentioned for, which is that Rachel become bankrupt. So how are we going to write the irrecoverable debt? Date detail, debit, because this is a journal, so basically it's the debit and credit concept. So the date is 30th, so we put 2024, April 30th. Okay, how much that Rachel owing? 215. So this amount 215 you have to write off as a irrecoverable debt. The moment you saw the words bankrupt, so in your mind, irrecoverable debt account. So put in your irrecoverable debt and then put the ratio. Because irrecoverable debt is expenses, so it's in the debit side. Okay. Now, next is that they say that a narrative is required. So what you're going to do is that if you don't have the idea what to do, you just copy from the question. So you saw this one, they say to write off amount owing by Rachel. You follow it, put in return of the amount owing by Rachel. So due to what reason? Due to bankruptcy. So that is how we put in, use the information in the question to put as a narrative. Okay, number C. The total amount of money which Aldo received from the trade receivable during the April 2024. So let's see one by one how much that amount that received. So the first one, April 9. So we can do the working to show it. April 9. What is the amount that we received? This one from AWA. They didn't mention any discount, so we just take in 689. Okay, the next one, receive check on 13. On 13, we receive a check. So this one from Mahe. Okay, and they say that receive a check from Mahe in full settlement of the invoice 660. So actually, we are recording how much they receive. So you just take the net amount 625. The differences actually is your cash discount. So, but you just ignore it because you are calculating the amount received 627. The next one, receive 760 from Nuru by electronic transfer. Nuru has deducted 5%. This one, 5% cash discount. Later, if the question asking calculating the discount allowed, then we have to calculate on it. So April 19, and then put in Nuru 760. Okay, the next one, there is no more other transaction related to the money received. Then we just calculate the total, how much of it. So this is the total amount that we receive. Okay. Now the next one, question number 2, the total amount of cash discount. This is the question that since they're asking the cash discount, so all the payment related for this sheet, you need to see any that related for the cash discount. Okay, we just put in this one first. Later, we need to see which one is related. So next, see. Okay, the first one, 9, they didn't mention at all. So that means this is not related. So you don't need to count. And then on 13, you saw that the amount that in full settlement is 660, but only received 627. So you have to calculate the differences, which is 660 minus 627. So the amount will be 660 minus 627. Okay. And then Nuru. Okay. Nuru received 760 from Nuru by electronic transfer. Nuru deduct 5% discount. So 76 Nuru 920, and then this amount is deducted 5%. That means this 760 is 95%. So how we going to calculate the amount is we take 760 divide 95% and then times 5%. So this is how we calculate the discount. Because from this information that Nurul have two transactions in here and then in here. But the question 19, they only receive 76. And this one is after the deducting 5%. That means this is 95%. So to calculate the discount, we take 760 divided by 95 times 5. So which is the 40. Okay, the total amount is 73. Okay. Now next is this is the sales ledger control account. A sales ledger control account is like a trade receivable. Okay. Sales ledger control account, but it's record the total. This is record total trade receivable. So the standard item for sales ledger control account, debit side, you have balance brought down. So let's see what are the item. The 6th column, date, detail, and dollar. Okay. So 2024, April 1st, balance BD. So where is this balance BD come from? So the balance BD is from here, the opening, first day, 1st April. This one, 3658. 3658. And the question saying that they have sell on credit only. That means your sales journal, this amount sales journal that you got is your total sales. The date must put the last day, which is your sales, total sales, which is you already done the calculation, which is this one, the amount 762. So this amount from here, 762. And in this question also, we have one item, this 20th, Nurul return goods 30. So there is a sales return 2024, April 30. Put in last day, all the sales, all the transaction except the opening balance, you put first day. The rest you put last day because this is a record the total. So sales return and the amount is 30, which is this amount 30. And then we already calculate the bank amount, which is the amount received and the discount allowed. So this bank is from here. Okay. And then the discount is from here. The information from these two. Okay. Number 30th, Rachel become bankrupt and write off as an irrecoverable debt. So irrecoverable debt. And the amount is 215. Okay, now we calculate the total balance CD, balance BD. So the total, subtotal, which is these two. Okay, and then your credit total is 2394. So we have balance CD because sales ledger control account is a current asset. So debit minus the credit, the differences is 2026. So this amount, always remember to complete in the first, okay, following month, first day. Okay, debit credit must be complete for this amount. Okay, now next is that although is considering changing his credit term, he will introduce more credit check on new customer. So that means there's all the new customer that before taking their order, they want to check the credit, see whether they are good customer or bad customer, and will increase the cash discount to 7%. So give higher cash discount. That means you will encourage customer to pay you faster. So this one, pay faster. This one, check the new customer, then reduce the risk of irrecoverable debt. So this is a two thing. Now, advise Odo whether or not he should make this change to his credit term. Justify answer by providing two advantage and two disadvantage. The moment they say two, you don't change it, just follow the instruction. So what are the benefits when we pay must give higher discount, or we talk about the reduce the risk of the irrecoverable debt first, which is that check, credit check on new customer. Most of the company, they will do that for the new customer to make sure they are the good customer. So this one, the good thing is that reduce the risk of irrecoverable debt. Okay, there is an advantage. But what is a disadvantage? Because you have two things you need to talk. One is the check new customer. Second is the increase the cash discount. So what is the disadvantage when we check the new customer? So here you will create a lot of administration work. So additional has to the staff. So it may not have enough manpower. May not have enough manpower to do it. So that could be happen. So in this case, what happened? He has to hire if not enough manpower, he has to have to hire staff. So this one is a additional cost to the business. So this is a disadvantage. The consequence, additional staff. Come to the increase cash discount. So this one encourage, the advantage is encourage earlier payment or prompt payment. So this is a good thing. Then your cash flow position will be better. Cash flow improve. So this is a good thing about it. But disadvantage is that your profit reduce. Why can be reduced? Because that the cash discount, this one is a discount allowed. It's an expenses. So this will reduce the profit. Okay, then also, even you give higher discount check customer, there is no guarantee. No guarantee. 100%, no irrecoverable debt. It still could happen, but the chance should be reduced. That is possible. Come to the conclusion. So depend on you, what you think. You can put it in so long as the logic. For me, these two practice is quite normal in the business. So I will encourage. So I agree. I will agree to implement the credit check on new customer so that to reduce irrecoverable debt. Okay, this could be the answer that I put in. And I also can put it, I can say that I will increase the cash discount so that the customer may pay faster. That is the answer. Generally, I agree with these two methods. Okay, now next, move on to the next question. Okay, Paul is a trader and then he maintained 3-column cash book. Paul has prepared draft financial statement for the year ended. Paul later discovered the following 5 errors in his accounting record for the year ended 31st March. So this one, it should be under correction of the error topic. So as I say before, there are 2 topics you must focus a lot, section 1, section 2, and the correction of the error. Because most of the exam sitting, they will test these 2 topics. Okay, let's see what are the errors that can find from here. Okay, they say prepare the journal entry to correct these 5 errors. Narrative are not required. That means we don't need to write the reason. Okay, the number 1. A purchases invoice 140 has been debited to the account for office equipment. Office equipment is a non-current asset. This is a non-current asset. This one is the cost of sales. This is different class. So this one we call error of principle. So we need to adjust, reverse out the non-current asset and put the purchases account. So debit purchases, credit office equipment. And the amount is 140. So 140. This is error of principle. Number 2 error. Cash discount received 18 has been recorded in the bank payment column of cash book. So this discount received is in the credit side. We should not put into the debit in the bank. So what we got to do is we have to debit bank and credit discount received. Okay. So this one is 18, because they say that cash discount received 18 have been recorded in the bank payment column of cash book. So this one we need to, let me see first. Okay, for this one, the sentence actually is talking about this amount, the double entry, we should debit trade paper, credit bank, credit discount received. But this amount, we all put into bank. We should be in here. So that's why we debit bank, credit discount received. Okay, number 3. Carriage inward has been credited to the carriage outward. Carriage inward and carriage outward both also debit side. But carriage inward is under cost of sales. Carriage outward is in the expenses. So when we credit this one, this is a wrong account. So we have to debit carriage outwards to reverse out the error. This is to reverse the error. But this carriage inward also in the debit side because it's a cost of sales. So carriage inward. You notice that both also in the debit side. When the both also in the debit side, it means we have to use suspend account. So we were going to debit carriage in outward. I want to reverse out the error, carriage outwards, and then put back the correct one, carriage inwards, and then suspend account. So the total amount is 82, 82, so that suspend will be double. Number 4, a payment for insurance 375 has been debited to the bank account and credited to the insurance account. So number 4, this one is by right. When we make payment, insurance account should be credit. Bank should be credit. Okay. Okay, bank should be this one, sorry, this one should be insurance should be debit, bank should be credit. But now is that has been debited to the bank and credited. This is a wrong side. This is complete reversal. The error of complete reversal will have to be double up. So we have to debit insurance double amount and credit bank double amount. One, to reverse the error. Second, to put back the correct one. So this is complete reversal. Debit insurance and credit bank. So the amount is double. So 375 times 2. Okay. So this one is a principal error. Okay. This one is the complete reversal. Okay, so this is the answer. Now the number 5, the bank receipt column of the cash book for February has been undercut by 90. So means that cash book, bank means bank account. Undercut means short. This is a one-side error. So you have to debit the bank, credit suspend. So we debit bank because bank is short, and then credit suspend because this is a one-side error. So the amount is 90, 90. Okay. Now next is that, let's see what other question about. The question is, calculate the correct bank balance at 31st March. So we have opening. What are the error related to the bank? Let's see one by one. We have first, second, number 4, and number 5. So when you debit, mean bank increase. When you credit, bank will decrease. So this is the debit, 2 debit, 1 credit. So these 2 plus, this one will be minus. So the correcting the bank amount. So the original bank balance is 3290. And then based on the error in here, number 2. Number 2 error, we have discount received, okay, which is debit, mean add. And then number 4, we have insurance account, but it's in the credit side, means that minus, but don't use negative sign, put bracket for the calculation. So for the bank, for the statement format, use the bracket. Next is that number 5, error 5. Error 5 is the understate, bank understate, okay, understate by undercut by 90. So you add 90. So this one, you have to take 3290 plus 18 minus 750 and plus 90. So this is the amount for the bank. Okay. Now next is that calculate the corrected profit. So take notes that if the question, because exam question quite often come out for this, correcting the profit. If the correction, talking about correcting the profit, means that you can use the journal format to tackle the question. Focus those that income statement account, like example, purchases, and then discount received, carriage inward, carriage outward, all this, insurance, this one no income statement account. If the adjustment is in the debit side, the income statement debit side, then your profit will reduce. If your adjustment is in the credit side, profit will increase. So that is how we tackle the question. So from here, purchases debit, that means reduce the profit. And then discount received in the credit side means increase the profit. These two sitting in the debit side, that means you have to reduce. So double up the amount, 164. Next is that insurance debit, so also reduce the profit. Number 5, no effect because these two are the SOFP. So now the profit adjusted, take this minus plus minus minus. So you will get the revised profit equal to 32. Okay. The next question is a partnership or no, limited company. This one. Okay. Zara and Tanya are the shareholder or director of Q Limited. The company director of Q Limited has providing the following. This is trial balance that we have. Okay, we look into the additional information first. Inventory at 31st Jan was value. So this one is a closing inventory. It will be sitting under the income statement under the cost of sales, closing inventory, and also sitting under SOFP under the current asset. Depreciation on the fitting is to be charged at 10% per annum using straight line method. So this 10% straight line method, so we have fitting the cost, so you times 10%, so you will get 1,008. So this one will appear under the income statement expenses, and you add into your this amount, you will get accumulated depreciation under SOFP. Payment of for advertisement 75 is outstanding. Outstanding means that accrued. End of the year, expenses accrued have to plus. So to find your total income statement amount. Okay. So I do the calculation here first for all the items. So for number 2, the depreciation for fitting is taking 18,000 times 10% equal 1,008. So this one will be under the income statement. Okay. And then number 3, to calculate your income statement amount for the advertising. So advertising. So you have to take the amount paid, which is your pay amount in here, advertising 5,004. So you put 5,004. End of the year, accrued have to plus. So this one you have to plus. So you will get total 54775. Okay, number 4, dividend, no dividend were outstanding. That means you don't need to do any accrual or whatever, just based on the actual pay amount for the recording. Okay, let's see what other question they ask. Okay, they ask for income statement. So we prepare the income statement. Income statement. Okay, let's see what are the items. The 4 section for income statement: revenue, cost of sales, and other income and expenses. So this one, revenue, okay, less cost of sales. So take notes, don't change the format, follow exactly. So the item, first item, inventory at 1st February 2023. And then you have purchases. And then what else did we have? We have closing inventory here. So we put in the amount. Revenue is 78,000. Then opening inventory is 2,950. Purchases is 38200. So these two add up. Okay. And then less closing the inventory at 31st Jan 2024. So the amount is 4720. This is a minus. So you take this minus this. This is your cost of sales. Take your revenue minus cost of sales. Get your gross profit. Write the word gross profit. And this question don't have other income. So we less the expenses. So let's see what are the expenses that we have first. So our expenses, we have rent and insurance. Rent and insurance. Okay. Rent and insurance. The first column put the detail. Second column put subtotal. Okay, the next one, director salary. Director salary. So director salary is 19,000. And then general expenses. General expenses. General expenses is 3,420. And the advertising got the adjustment. Try to write your working or your adjustment show beside your detail. Okay, right beside your detail. So this one 75. Okay, so this one will be 5,475. And then what else? Depreciation. So depreciation for fitting, same thing. Show your working, how you get it. 18,000 times 10%. So this amount is 1,008. Okay, is there any more? There is no others expenses. So we just add the total. Okay, this is the total expenses. Then now we use the gross minus the expenses. This is your profit for the year. Okay, so put in profit for the year. If you see the as interest, you have to add one more item called profit from operation. But this question don't have. Okay, the next one. The question is asking, calculate the retained earning. So what are the items in the retained earning normally did we have? Which I just list out first. Then after that, we see what are the items. Retained earning. Okay. Opening balance, which is your beginning from the trial balance. This one normally in the trial balance. And then profit for the year. If you have any dividend, then you minus the dividend pay. And then if you have the transfer, just now I think we didn't see any transfer of it. If you have transfer to the general reserve, you have to put in, but in here they don't mention anything. So I believe don't have. So now the opening is 2297. And our profit for the year is this one. Dividend pay. Is there any dividend pay for this question? Okay, you saw that this is the dividend pay, 2005. So we minus 2005. Then we get the closing. So take these two plus. Okay, these two plus and then minus. So we get this balance, which is the closing, which is the retained earning for the year ended. So the balance. Okay, the next one. Okay, the question asked to prepare the SOFP, Statement of Financial Position, Statement of Financial Position. So statement of financial position, if the information complete for the non-current asset, then you have to put in 3 columns. So the non-current asset. So we have the cost column, accumulated depreciation column, and then we have the net book value column. So okay, let's see what are the information available. So for the non-current asset, you saw the cost provision. This is the item. Okay, they have only one item fitting. Okay, put in the cost. The cost is 18,000. So take notes, accumulated depreciation is taking the balance brought down, which is 5,004, plus the current year depreciation, which is 1,008. So these two amount add up. You get the accumulated. So minus. So this is the net book value. And then the next one, current asset. The current asset, normally if we arrange it, we should start from the inventory first. After that, trade receivable, bank, and cash. So let's see any trade receivable. So they didn't give any trade receivable. That means we assuming don't have. Okay, we only have the cash at bank, which is a bank account. Bank, only these two. So we can put into the second column. So inventory is a closing inventory, 4720 in the additional information. And then the bank is 915. Add these two total. Okay, you get this up. And then, no, sorry, put into the second last column because you got no other thing already. So you calculate these two add up, you get your total. This is your total asset. Okay. And then next is that try to in the exam underline when it's a like you want to calculate subtotal, you underline. So that is the purpose of it. Okay, do the underlying of the all the subtotal and total. Next is that because this is a limited company, we will have the equity and liability. We didn't call capital, we call equity. So the equity, we have equity. We have the ordinary share capital. Ordinary share capital, no change of it. So we just take the amount, 13,000. And then we already calculate the retained earning. So within the retained earning, this question don't have the general reserve retained earning. Take the calculation that you have in here, put in together, get the total out. So this is only 2 items. Normally, they will have 3 items, include a general reserve, but this one only 2 items. Next is that non-current liability. Is there any non-current liability in this question? Also don't have. So we skip it. Last is a current liability. Current liability. So what are the current liability we have in this question? You have the trade payable. So trade payable, no adjustment. So 2288. And then in the additional here, payment for the advertisement, which is the outstanding. This one is the other payable. So these 2 items consider liability, current liability, and then plus the equity, you get the total. If you have these two same amount, that means most probably the statement of financial position should be correct. Okay. Now next is that okay. Zara and Panya would like to expand the company and increase sales. In order to do this, they are considering increase the amount spent on the advertisement by 100%. Currently, how much the advertisement cost? The advertisement cost is this one. If they increase 100%, that means times 2, double, which is about the 11,000. Okay. So now, next is that advise Zara and Paya whether or not they should go ahead with the 100% increase in the amount spent on the advertisement. Justify your answer by providing two favor and 2 point against of this one. First of all, we analyze from the profit first. If we're going to increase, logically, yes, the sales should be increased. Okay, from here, if by increasing this amount, should the sale can be increased because advertising will create awareness. So people will know your product, then they will come and buy. So new customer can attract new customer. Attract new customer. So there is a possible good thing happen when you have the okay. So this is the first thing that we can talk about. Advantage, sales can be increased because advertisement can create awareness and attract the new customer. So this one, in future, it may benefit long term. Okay, it will benefit in long term because this one create awareness. What else that possible? The good thing. So when your sales increase, so sales increase, so this one will reduce the inventory level. So the chances to save some costs, save storage costs, okay, and reduce obsolete inventory. So there is a possible benefit of it. But disadvantage, what's the problem of it currently? By looking at the profit, existing profit is only 1,072. By increasing double the expenses, advertising expenses double, the business will make profit. The business will make losses, sorry, not make profit, make losses. So when make losses, it may have problem to survive in long term and cash short of cash inflow. So this would be risk to the business. So in this case, so what they do, they have to, the business may need to borrow money to continue the advertising. So what happened? This one, you have to pay the interest, have to incur loan interest. So this one is not a good thing to the company. So this also not guarantee increase the sales. So basically, if you ask me at the moment, by looking at the um, conclusion, well, for me, I think this is not the right time, not the right time to have advertising costs increase, because the profit is low. So it will make the business make loss. So what they can do, you give suggestion. So what they can do in order to increase it, the partner or the business should do other promotion to attract customer to buy. So there is one of the idea you can suggest. Okay, let's move on. Question number 4. This is other receivable, other payable topic. Okay. Ahmad owned a trading business. He prepared his financial statement to 31st December each year. Ahmad has some unused office space, and he decided to use some of this to store inventory and rent the rest to Bila. On 1st Jan 2023, Bila start rent the office space from Ahmad. The annual rent charge is 480. So when they say the annual rent, this is referred to the income statement item. Okay. From Ahmad point of view, this is a rent receivable. From Bila point of view, this is a rent payable. So you have to be careful what are the questions they ask. This one is an income. This one is a expenses. So now next, during the 2023, Bila paid the following amount to Ahmad bank account. There are 2 payments made. Prepare Ahmad rent receivable. That means stand from Ahmad point of view. This is an income account. We are preparing the income account. For the year ended, financial year ended is this one. Okay. 1 year, this amount. So now how are we going to prepare 6 column? Rent receivable, date, detail, dollar. First of all, this is on first started to rent. So basically, this one no opening. Now, from the income account point of view, end of the year, 2023, because there is no opening, so basically it's a December 31st. Both sides also same. Now, here we have annual rent, which is the income statement amount. When you saw the word annual, it's an income statement amount. So 4,008. There are 2 payments received, which is to go to the Ahmad bank account. So you only can take bank account April 1st and then September 30th. So these 2 days, both also must put bank. Okay, the amount is 3,006 and then 2,004. You notice that the total in the credit side more than the debit side. So means that in here we have the liability, which is the balance CD. So take the credit 6,000 minus 4,008. So this is the liability that Ahmad have. Means that Bila pay in advance. Bring the balance CD to the balance next month, which is that 2024 January 1st. Balance breakdown. Balance CD, balance BD always complete one set. Okay, so there is the information for the rent received. Next is that B. Ahmad sold all office equipment 1,350 on 3rd Jan on credit to Rahat. The equipment has been purchased for 3,200 on 1st Jan 2021. Ahmad charged depreciation 25 using reducing balance method. He does not charge depreciation in the year of disposal. So we calculate this depreciation amount first. Depreciation. When this asset was purchased on 2021. So this is a first year depreciation. So how are we going to calculate first year? Take 3,200. First year, no accumulated depreciation. Straight away times 25%. So you will get the amount 3,002 times 25%. So 800. Second year, when you calculate, so you have to take 3,002 minus the first year 800 and then times 25%. So how much of it? Take 3,200 minus 800 and then times 25%, 600. And now the question is that financial year ended, he sold the office on the 3rd Jan. That means 2023 don't calculate the depreciation because he does not charge depreciation in the year of disposal. That means only 2 years the disposal amount. So total is 1,004. This is the accumulated depreciation to reverse. So now the disposal account. So take note, disposal account. The account format are fixed. Date, detail, and dollar, the 6th column. The cost account must be in here. When you dispose on 2023, January 3rd. So put in office equipment. This is a cost account. Cost account always in the debit side, which is 3,002. And then the accumulated depreciation, which is that June 3rd. So this amount, 1,004 that we want to put in, which is provision for depreciation account. Reverse from the provision for depreciation, 1,004. And next, how much they receive the asset? They say that Ahmad sold office equipment for 1,350 on credit to Rahat. That means Rahat is the one received. This one, no money, no bank, because they sold on credit to Rahat. How much of it? 1,350. So these 3 accounts always the same position, no change. This one must be debit, these 2 must be credit. So the differences we record on the last day. Debit more than the credit, so December 31st, last day. Calculate the losses and transfer to the income statement. So this one is 3,002. So this amount is 3,002 minus. So this is a loss that need to transfer to the income statement as expenses. So this income statement sometimes can be in the debit side depending on the question. Okay, now next is complete the table by place a tick to indicate the new each amount of spending on the new inventory storage page is a capital or revenue expenditure. Capital is something that you buy for one time. You incur for one time. Okay, not recurring. Revenue expenditure is that day-to-day operation payment for incurred more than one time normally. The painting the wall of the storage. This one you paint the wall of the storage area. Your storage area, this one is you already have the existing storage area. So you want to repaint it. This is the revenue expenditure. The storage area, that means this one is that you want to keep the thing you put inside the storage area. So this is a capital expenditure. Install, you get someone to fix it. When you have installation first time, only incurred one time, this is part of the capital expenditure. Lighting fitting. Lighting fitting, you fit the new lighting area. This is something that you put it there. There is a new thing. So this is the capital expenditure. But the bulb is that when spoiled, you just change it. So this one is recurring. You need to buy whenever your lighting bulb is spoiled. The next one, here is that they ask for the ratio. Okay, inventory at 1st January 2023, 9,000. Receivables, 6,180. Cash and so on. Ahmad inventory at 31st. So this is a closing inventory. This is the opening inventory. Okay, his purchase for the year ended is this one. So what are the questions they ask for? They ask for the rate of inventory turnover. So in this case, we calculate the cost of sales first. Cost of sales. So how are we going to calculate the cost of sales? Take the opening inventory plus the purchases. The purchases for the year is 97,000. Closing inventory is 12,130. So we get the amount for 9,000 plus 9,700 minus 12,130. So this is the net for the cost of sales. And then we also need to know the average inventory. So how to calculate average inventory? Take the opening inventory, 9,000 plus 12,130 divided by 2. So let's calculate the amount. 9,000 plus 12,130 divided by 2. So this is a average inventory. Rate of inventory turnover. Rate of inventory turnover. The formula is that cost of sales divided by average inventory. Means that we have to take 93870 divide 10565. So the amount will be 93870 divide 10565. Okay, the question saying that 2 decimal place. So make sure you follow the instruction 8.89. Okay, so this is the answer that we get. Okay, the next one is current ratio. So current ratio is current asset. Formula is current asset over current liability. So let's see what are the items. So our current asset is, let's see what are the items. Closing inventory. Don't take opening inventory. Take closing inventory. 12,130 plus receivable 6,180 and then plus cash 175 and then that's all. Only 3 items. And our current liability is payable 5,500 plus 640. So these 2 items, let's calculate the total. 12,130 plus 6,180 plus 175. Okay, the liability is 500 plus 640. So we take this divide by this one. But when you put the answer, always left and right. So this one over 6,140. So this is the working always that taking the left and right. Okay, you take this one, divide by this one. So always the behind is a 1. Because they want 2 decimal, then you put 3.01 to 1 ratio concept. Always the behind is a 1 decimal. 1, okay? Now, liquid asset, okay, liquid ratio or acid test, okay? We have all these items, same concept, actually following the same concept. What we have is that only current asset, you don't take the closing inventory. Exclude the closing inventory. So what you have now is that no closing inventory, your this amount. And then, okay, so you notice that after this, your ratio change become 1.04 to 1. So this is the current ratio, acute ratio, no inventory. Okay, so this is liquid ratio. Liquid ratio, don't take the inventory. Current asset minus inventory. Actually, it's don't take the inventory for your calculation. Okay. Now, next is that Ahmad rate of inventory turnover for 2 was lower than the 2023. Suggest two problems which may cause by Ahmad lower. So when come to this question, always remember use the formula to tackle the question. The question is rate of inventory turnover is a cost divide average inventory. So the cost is talking about the selling price and the purchase price. Okay. So when this one is no change, that means sales activity is slowed down. So when sales activity is slowed down, that means your stock or your inventory may become outdated. Okay, goods become outdated stock or obsolete. Or if you talk about the holding inventory, this is average inventory is a holding inventory. So when you hold too much, what is the problem of the inventory? The cost, the storage costs will increase. So your two problems may happen: obsolete stock and the storage cost may increase. Okay, last question. Stella start a business, okay, and then she sell one type of goods only. She has not keep a full set of accounting record, but has provided the following information. Half of Stella purchase were on cash term and half of on credit term. During the year ended 31st, she paid 34,000 she owed to the. Unlike her competitor, Stella made all of the sales for cash, markup 32%. So the following information for the expenses paid at 31st March 2024, the 300 was unpaid for wages, and then 500 was paid in advance for the rent. Insurance 2,004 per annum. On 1st April, Stella paid 3,000 for insurance for the following 15 months. Okay. Other expenses. Okay, let's see one by one. What is the question they asked for? Here, they say that calculate the total purchase for the year. So the purchases is related from the question in here. So here they say that half of the Stella purchase on cash and half on credit purchases. During the year, she paid. So this one pay on she owed, that means this one, you want to find the purchases, the trade payable. Okay, just started, that means no opening. Purchases, we don't know. But they say that she paid, means bank 34250, and then owed means balance CD, so 2960. So to find your purchases, these two amounts have to plus. So the credit purchases is 34250 plus 2960, which is equal to, let's count first, 34250 plus 2960. Okay, this is credit purchases. And the cash purchases, so cash purchases they didn't put in here, but we need to take notes. There is a cash purchases, because half. So, and half on credit term. So means that how much the cash purchases will be equal to the credit purchases. So total purchases is 74420. So this is for the answer A. Okay. The next one, they asked to prepare the income statement. So let's see what are the information for the income statement. Okay. The revenue is the first item. So what are the revenue that she has? So here they didn't mention. Okay, but the information markup will help her to find. Okay, she made all of her sales for cash. They make only cash sales. So use the markup information. So we have less cost of sales, no opening inventory because just started business. Purchases we already have, which is that given on top. So the total, this one, so purchases, this amount, less closing inventory. So our closing inventory is, let's see what are the information. Closing inventory, here, closing inventory is 6420. So we take this one minus this one. And then gross profit is 32%. That means this one 32%. This one is 100%. So I take this amount times 32%. I will get this one. Okay, 217. Okay. This one we round to the, let's see, because got decimal. Normally we won't have the decimal. Let me see, what else the thing goes wrong. Inventory 6, because I typed error, 6420. So 6420. So this is the answer should be. This is the typo error just now. So how are we going to find the revenue? Take these two amount plus together. Okay, because this one is 132% actually. Okay. Now next is that expenses, less expenses. Our expenses from the top here, they have three information, rent and insurance, but they all got adjustment. So what are the information? We pay 6,750. And then they say insurance 2004 per annum. On 1st April, this one, Stella paid 3,000 for the insurance. Okay, they mean how much the prepaid? 600 prepaid. So minus prepaid 600. And then what else that information? Rent here. 500 was paid in advance. So this is also prepaid expenses. So I also had to minus. So these two had to minus. Next is that, okay, let's put in 6,750 minus 600 minus 500. And then what else? Wages. Wages got adjustment. Other expenses include that pay for the flower and 1/3 of the own home, trip business. Okay. So wages is any adjustment. Okay, wages here. Unpaid. Okay, 300 unpaid. That means we have to add. End of the year, accrued have to add, prepaid had to minus end of the year. So this one is 8600. And then for the other expenses, we have pay amount 1815. And then they say that 120 pay for the vase and the flower. So this one, 1/3 of these were for Stella Home. Own home means that as this is a personal. So we have to minus 120, 120, half for it. And then Stella treat business cost of under, that means whatever less than 150 as a revenue expenditure. So this one we divide by 2 because half only. So take 1815 minus 60. So this is the amount should be recognized as expenses. So we have 3 items only. So take the gross profit minus. So this is our, where is the mistake? Let me see. 60. Oh, sorry, 1/3. This is 1/3, not half. So I divide by 3. So in this case, I should minus 40. Okay, so this is 1/3, not half. Okay, now next is that Stella's sales revenue was same. Okay, and then each month she's not considering selling on credit as well. So advise Stella whether or should start selling on credit. So the good thing when the advantage, we talk about advantages. So the advantage selling on credit, this one will attract customer to buy more because they can pay later. Okay, so sales will increase. So the consequence, sales increase. Other than that, the competitor, since that you have competitor, so this one will able to help to compete with competitor. Okay, so this will increase market share. Okay, disadvantage. The disadvantages is that when you on credit, the risk of irrecoverable debt increase. So this would be affecting the liquidity. Okay, and then also have to have more monitoring. So this one, credit control, you may need to hire credit controller have to hire to monitor the debt. So this is the disadvantage. The conclusion is there's benefit on disadvantage up to individual. Okay, next D. The accounting principle with Stella is following when she treat payment for small item which may last longer than 1 year as a revenue expenditure. So this one is because the amount is insignificant. The item that insignificant, we will treat it as a revenue expenditure because of the materiality principle. So there is a reason we don't need to keep so much recording. Charge it up as expenses. So what is the advantage? Because the time cost benefit, okay, of the recording. Small value, small item, okay, is not benefit, okay, is not benefit to business, okay, and maybe also cannot last long, means that less than a year, it will spoil. There's the reason for. Next is that E. State two advantage of maintaining full accounting record. First is that your account is easier to refer, easier to check, and then can be more reliable, especially when it come to audit or tax computation. So there is a benefit for the business. Okay, that's all for this paper.